Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents, our weekly podcast where we provide you with financial advice in a language you can understand. I am Marion Gilman, Executive Vice President here at Freedman Financial.
And I'm Christian Kircher, the Director of Financial Planning here.
So we'll be your host today. Our traditional host, Marc Freedman, is traveling. So he's out for exciting adventures, and I'm sure when he gets back, he'll want to tell everybody.
I imagine there will be an extra long podcast with all his experiences across the world.
Absolutely. So welcome back if you've been here before, and welcome to new listeners as well. So Christian, can you believe that half the year is over?
I absolutely can. So this is the time of year that my wife and I always start to plan out. We're like, okay, so we've got this going on, and then summer's over, and then Thanksgiving, and then it's New Year's. That's kind of our tagline once we get into July, is that New Year's is right around the corner, and we are halfway through the year.
Yeah, absolutely. And you know, Sonia, of course, who works with us and is our operations person, I think she says, well, summer's almost over as soon as summer starts. So, you know, it's kind of depressing when you think about it like that. But I prefer to think that, okay, well, we've got all of summer ahead of us.
I was going to say, there's half a year left, not half a year past.
Exactly. So, you know, you might have some plans for the next half of the year, but it's always good to have a plan, a financial plan in particular, to take care of your finances along the way and be sure you reach your goals. But this year in particular has been a wild ride.
It has been a very wild ride. And it's one of those things where, you know, if you go back and you say, and you list out all of the things that have happened in the first half of this year, whether it be
been a lot.
Economically, politically,
right.
You know, just
threats of tariffs, pull back on tariffs.
Yeah. I mean, all of these things,
Right.
and we've navigated it throughout the year, and here we are, about halfway through the year, and we look at it and we go, okay, so the S&P 500's up about 5% for the year, which seems like a pretty tame experience for 6 months.
Yeah.
You know, that's kind of in line with historical averages.
Yeah.
But we look at what we've experienced throughout the first half of the year, and it sure doesn't feel like it's just been a boring little climb.
Nope. If you had spoken to us around April 1st, our chatting would have been a little bit different than it is today, right?
Absolutely. That first week of April was a time
Wild.
where there was a lot of uncertainty,
Yes.
and a lot of concern in the market and with clients and
Absolutely.
people wondering, you know, is this time different? Are these actions going to so negatively impact my portfolio that it's going to impact the most important thing, which is their own financial plan and what they want to do for the next 10, 15, 20 years.
Their ability to retire, their ability to buy that second home, whatever it might be. But that the first 3 months of the year, we started off pretty even keel. It looked very good. And then all of a sudden, boom, we had threats of tariffs. I think that's what sort of started it. And the market just plummeted. I mean, it really was incredibly volatile, you know, in mid-April, in March, April, and then it starts to turn around. And once it turns around, it comes right back, and it's just amazing. And I know everybody has that thought, is this time different? Should I sell out? Market's way down. I'm never going to recover. I need my money. Worst time to sell out always. Because here we are, we have had the fastest decline and the fastest recovery from a decline that we've ever seen in the market.
Right, and we thought that, you know, during COVID, it was very quick that it came back over like 5 months after that big decline. This was even quicker than that, and so it's almost like these cycles are speeding up, and it really puts a pin on the point some people talk about wanting to get out of the market when there's a lot of volatility and concern. But that's really only half the battle if you do choose to do that. Because the other half of the battle is figuring out when to get back in. And
Right.
very often the market recovers before the news recovers. And this is just a great
So true.
reminder of that, as there's still a lot of uncertainty in the world around us. But
Right.
the market is forward-looking, and it's not just forward-looking 3-4 months, it's forward-looking 5, 10, 15 years.
Absolutely. So we ended up, if you look at the beginning of the year to now, it looks like, wow, okay, we're up. We went gradually. It would have been great if we just went gradually up. Market never works like that. The bonds actually did well the first half of the year as well. The thing that did not do well the first half of the year was the dollar. For any of you traveling internationally, you might be surprised to see that the dollar has fallen against some other currencies somewhere in the neighborhood of 8 to 10%, which is a big difference, and you were just overseas.
Well, I thought it was very funny because I like to pay attention to the currency stuff. I'm
Yeah.
a little bit of a nerd about it. And so Jessica and I were in Greece last fall.
Yeah.
And at the time, the dollar was approaching almost even with the euro. It was
Yes.
getting really close. It was like,
Yeah.
wow, we got such a good deal while we were
Yeah.
in Greece.
Yeah.
I could kind of do the conversions in my head. And we were just in Austria and Italy. And man, those conversion rates have changed significantly, and it's back to $1.15, $1.20
Yeah.
per
Yeah.
euro, and that makes all the math a little bit harder when you're thinking about how much is this souvenir. Oh, okay, you've got to.
Yeah.
So it has
absolutely.
been remarkable.
Yes.
And that dollar weakness comes out in a few different places. Sometimes people think, okay, dollar weakness sounds bad, but if you've been holding any international stocks, that has
Yes.
been a big surprise, because what happens when the dollar weakens, all the investments internationally strengthen in comparison. And
Right.
so for this year to date, we've seen international stocks increase almost 20% so far year to date.
And so for the past probably 20 years, a very long time, foreign stocks have lagged the U.S. stocks. And it has been a complete reversal for the first half of this year. As Christian just said, the S&P 500 is up about 5% year to date, and foreign stocks are up about, 15%?
15 to 20,
15
somewhere in
to
there, depending on.
20%, depending upon the market. It's amazing. So for those of you who also said, gee, I'm nervous about international, it's never going to recover, it's never going to do better. Well, guess what? It has recovered and it has done better. And this year has been, a very rude awakening, I guess, for those of you who didn't have any foreign stock exposure. Looking forward, it could be that foreign stock exposure is very important to everybody's portfolio, because again, the foreign markets are cheaper than the U.S. markets right now, so you could see more of a bump from foreign markets as we navigate this tariff realm, and none of this is over. So as we look out into the future, we do still have some thoughts about volatility coming up.
Right, and making sure we're staying diversified and making sure we're having exposure to these other very important asset classes or markets.
Yeah, absolutely, absolutely. So in any event, one of the things that in terms of trade, the tariffs have not been worked out. So that is something that we're watching very closely. What else have we been watching, Christian? How's the economy doing in general, growth of the U.S.?
Well, I think there's still a lot of uncertainty.
Yeah.
And the uncertainty with the tariffs, which you were hoping that we would get some certainty earlier this year, and it ended up just being even more uncertainty, is leaving a lot of companies to try to figure out, okay, how do we navigate this? What can we expect to be the business environment in 6 months to a year? And I think there's a lot of uncertainty there still,
Yeah.
which causes these kind of significant shifts, not just in,
Right.
in market price, but also in hiring, in different investments that these companies are making. And so there's some uncertainty in the markets, but overall, if you look at the stock market, there is a lot of optimism, at least in the intermediate to long term,
Right.
that things are going to be working out in the economy as a whole.
And one of the things that it appears to be happening is that the Federal Reserve, we've been watching the Federal Reserve quite closely, because the Federal Reserve might start lowering interest rates. President Trump has been very forceful about his desire to have the Fed lower interest rates. The Fed is being very cautious, as they always are, so they're looking for, conservative inflation rates and also continued growth in the market. And we're seeing more of that. Inflation has come way down, so it could be that the Fed lowers interest rates, and that is the expectation for the remainder of the year, that will happen at some point, which bodes quite well for both the stock market and the bond market.
Absolutely.
Yeah, and growth also in the economy. So you want to understand that, because if you can borrow at a cheaper rate when interest rates come down, the housing market could respond well to that, as could corporations, because remember, corporations borrow to fuel their growth as well.
Right, that's those bonds in your portfolio.
Absolutely.
And if they can borrow at a lower interest rate, they might invest a little bit more because they are all of a sudden working out their math there, and it makes sense to do a project that might not have made sense if the interest rates were a little bit higher.
Yeah.
So.
I mean, one of the problems with corporations as well that we've been seeing is that it's very difficult to plan when everything is so uncertain.
Absolutely.
So they don't know what interest rates are going to be. The tariffs are a big concern to many companies. And since that's unclear as well, it's tough.
Right, and I think we saw that with some of the GDP numbers earlier this year,
Correct.
where a bunch of companies shipped a bunch of stuff in before the tariffs took place. Then the tariffs got delayed, and they started shipping some more stuff in. And so that's going to make all those GDP numbers look very lumpy and askew and kind of weird. Yeah. You might get these these quarters where it says negative GDP growth, and then the next quarter is 5%. And if you kind of average it out, you go, okay, that's what it would have been like if everyone was a little bit more consistent through the quarters.
Right. But in any event, just remember, the stock market never goes straight up, and it never goes straight down either. It always recovers. So keep that in mind. Make sure that if you want to get serious about your money, make sure that you create a very well-balanced portfolio, well-diversified, as Christian said before, and something that you can maintain, sleep at night, and not be tempted to say, I've got to sell out when the market goes down. That is the biggest criteria in reaching your financial goals, at least in my mind. What do you think,
Absolutely.
Christian?
Just keeping your eye on the horizon and knowing that your financial plan is not just the next 3 months, it's the next 30 years.
Right.
Making sure that you've got a portfolio that can provide you the income you need to meet your goals and expenses, to be able to go visit the grandkids, to be able to pay for healthcare costs, maybe help with education, all those things. Those are 10, 15, 20 years down the line. We need to make sure your portfolio is reflective of those goals.
Yeah, not next week, right?
Absolutely. Or next month even.
Right. So if now's the time to get serious about your money and you'd like to partner up with us, we'd love to chat with you. Give us a call, 978-531-8108. That's 978-531-8108. Or you can visit us on the web at freedmanfinancial.com. That's Freedman,
2 E's and a D,
financial.com. And you can, when you go onto our webpage, you can scroll down on any page and sign up for our weekly newsletter that comes out Fridays at 10:30 a.m. And it's all about financial advice in a language you can understand. So give us a call, visit us on the web, and we'd love to chat with you at some point. Have a wonderful week and enjoy.
Thank you. Have a good one.
Bye-bye.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.